AI feels like the story of our decade. Everywhere you look, conferences, earnings calls, or investor decks, AI dominates the conversation. Money is flooding into the sector, and valuations are climbing just as quickly. But here's the question: who will survive and emerge as a winner on the other side? To answer that, we need to look at the financial realities and the historical parallels as well. Because while AI has enormous potential, the numbers tell a more complicated story. Let's get started. This isn't the first time investors have seen a frenzy like this. Back in the late 1990s, internet companies were raising billions of dollars on the promise of transforming the world. And many did. Amazon, Google, and eBay are still with us today. But for every winner, there were dozens of companies that disappeared when the bubble burst. In 2000 alone, the Nasdaq fell nearly 80% from its peak. Hundreds of the can't-miss startups with huge valuations were gone within months. Investors learned the hard way that innovation doesn't always equal profitability. Over the last 3 years, the major hyperscalers, Microsoft, Google, Amazon, Meta, and Oracle, have invested around $825 billion into AI-related capex. And across the entire industry, spending was over $1.2 trillion. This is one of the largest investment waves in tech's history. But what about AI-native startups like Anthropic or OpenAI? They have seen explosive growth. They have multiplied their revenue run rate year over year, and their adoption is skyrocketing. But running and training AI models is expensive, and they are not profitable. OpenAI plans to borrow and spend up to $115 billion through 2029. That is an unprecedented figure, especially for a company without another cash-generating business to lean on. Most probably, not everybody will win in the race to dominate AI. Take Salesforce, once hailed as the poster child for enterprise AI. In 2024, its agentic AI got investors really excited, pushing the stock to record highs. But by August 25, Salesforce stock hit a 52-week low. Why? Because adoption didn't live up to the hype. An MIT study found that 95% of companies investing in AI saw zero measurable return. Spending is surging, but returns are far less certain. So, who actually wins if AI's hype cycle cools? The answer likely comes down to two things: data and cash flow. On the consumer side, companies like Google, Meta, and ByteDance have unmatched data advantages. YouTube, Instagram, Facebook, TikTok, all these platforms generate oceans of user content that can train smarter AI models. And remember, video is the most expensive content to produce. Yet, YouTube get it for free from the users. That creates a training set no startup can replicate. On the enterprise side, companies like Microsoft and Oracle are even more entrenched. Microsoft controls Office and Azure. Oracle powers databases for around 60% of the S&P 500 companies. And when businesses integrate AI, they will mostly adopt solutions that are already embedded in their workflows. That lock-in gives them a really good chance to win in the long term. Now, compare that to AI-native startups like OpenAI, Anthropic, and Mistral. They have cutting-edge models, but no diversified revenue base. And they don't control consumer platforms or enterprise workflows. or at least not yet. OpenAI makes money from ChatGPT subscriptions, APIs, and enterprise deals. But none of those streams cover the infrastructure cost. It is said that for every dollar revenue, their cost base is $2.25. That leaves them caught in the middle, innovative but not yet defensible. Still, these companies are exceptionally well funded. Venture capital and investors like SoftBank are pouring in tens of billions to be part of the story. That war chest gives them time to experiment, scale, and potentially carve out a winning position. But history shows that first movers are not necessarily the long-term winners. Netscape pioneered the browser, Yahoo dominated early search, and MySpace was the first social network. Each of them proved the concept, but then the giants captured the prize. That doesn't mean OpenAI or Anthropic are not going to win the AI race. They have the momentum behind them, brand recognition, and talent. But it means that they need to innovate faster and build superior applications. Sam Altman said it best in a recent interview. He said that they need to do three things very well. First, they have to be the best in AI research. Second, they have to create products that consumers really want. And third, they have to build the right infrastructure. This leaves us with an open question. Who will actually win at the end? There are three possible outcomes. First, winner takes it all. AI consolidates like search did with Google, and one or two players dominate the market. If that happens, the winners will be the companies with the largest platforms, the ones with the most data and the strongest cash flow. The second option is that there are going to be multiple winners across different verticals. Consumer AI is led by companies like Google and Meta, while enterprise AI is dominated by Microsoft and Oracle. In this scenario, success depends on focusing on one vertical and defending that vertical alone, rather than trying to win everything. Third is that AI adoption is growing so rapidly across every industry that even second-tier players can carve out a profitable niche. In healthcare, entertainment, and in specialized enterprise software. Think of cloud computing. Amazon, Microsoft, and Google dominate. But there are plenty of smaller companies who are doing well in specialized corners of the market. The same could happen in AI if the TAM expands beyond current expectations. Each scenario has different implications for valuation, growth potential, and risk. But the reality is that no one knows which scenario will play out. And that is the reason why big cap tech is also investing in AI native companies. For example, Google is working on its own AI, but they are also investors in OpenAI. That just shows you that even they are not certain who are going to win the AI race. The truth is, no one knows which scenario will play out in AI. This is exactly why big cap tech are investing in AI natives, to hedge their bets. They are building their own models and pouring billions and billions to develop them. But they are not certain who will emerge as the ultimate winner. Take Amazon and Google for example. Both of them are investors in Anthropic. Microsoft, on the other hand, has a stake in OpenAI. And it goes even further than that. Chip makers are also investing in AI natives. Nvidia has made an investment of $100 billion in OpenAI as well. For investors, the key is discipline. High growth and great tech don't automatically translate into high returns. Markets can and do shift quickly. The dot-com era showed us that being early doesn't guarantee being the ultimate winner. Netscape, Yahoo, MySpace, all were first movers. But all were eventually overtaken by competitors with deeper pockets or better business models. Even the best products can lose if the economics don't work out. That is why the ability to self-fund matters, and it can be an important factor at the end. Big cap tech, with their diversified revenue streams, can fund AI for decades. They can absorb years of losses and still reward their shareholders through other parts of the business. But startups that rely solely on outside funding don't have that luxury. For them, market sentiment is just another risk factor. AI is real and its impact will be enormous. But the winners are far from decided. Investors face a choice: bet on the AI natives or back the giants with the structural advantages. Because in the end, this isn't just about building the smartest AI. It is about building the most sustainable business model around it. But the winners are far from decided. Investors face a choice: bet on the AI natives or back the giants with the structural advantages. Because in the end, this isn't just about building the smartest AI. It is about building the most sustainable business model around it. Thanks for watching, and please give it a like, subscribe, and watch another video. See you in the next one. Thank you. Bye.